Happy Friday, Eric Bible with the Bible team at Neil Home Loans. Unfortunately, again, not the best week in mortgage rates. And it's coming on the back of the prevailing narrative, higher for longer. And really what's driving the higher for longer narrative is where, yes, we've seen inflation pull back in line, or getting in line, I should say, with the Fed's target of 2%. But the component that is disjointed is the strength within the labor market. Jerome Powell was very clear in saying labor is going to be really the focal point going forward. So let's first start with where mortgage rates are today. As we saw over the last few weeks, mortgage interest rates have risen. With that, this week, no different. Today, we start with the 30-year fix approaching 7.7. Yes, not the news I wish to share, but it is the reality of the situation. So let's understand again what's driving rates to these levels. As I mentioned, yes, inflation has been abating, and we've seen that really over consistent delivery of inflation data. But with that, the prevailing narrative coming out of the previous Fed meeting was centered around labor. Jerome Powell was very direct in saying that the labor market is still incredibly robust, which present future challenges with inflation. As we know, inflation is really the centerpiece. However, looking at leading indicators into the future, labor is tied to the persistency of inflation down the road. So this morning we received the Bureau of Labor and Statistics jobs report. Market was anticipating 170,000 new jobs created. Unemployment to slightly tick down. Report was delivered today, 336,000. Unemployment did tick up to 3.8, but 336,000 new jobs created paints a very different picture than the narrative of a weakening labor market. It shows the exact opposite, very strong. With that, bonds ultimately took that as, okay, the reality of the Fed's standing point or talking point of being higher for longer is looking to be a reality. So what does that mean? What does that do for us going forward? So as we know, the Fed will meet again in November. And they've been very clear in saying, yes, we want inflation in line with 2%. We've seen progress on that. But the labor market showing signs that it is still growing at a very, very strong rate definitely presents some challenges. So on that front, it is still anyone's guess at this point as to what the Fed will do. But I know they're definitely watching these reports and creating an argument of, do interest rates need to go higher? Now, we've heard from a number of Fed presidents over the last few weeks in that they will continue to monitor the data. Some are saying we need additional hikes. Some are saying we need to stay at these current levels. So at this point, time will tell. But with that, bond market is coming to grips, as is the stock market, that these rates that we're seeing will likely be here for some time. Now, what does that mean for us? There is still opportunity out there, no doubt. Homes are still selling and people are still buying. The prevailing narrative is people need places to live. Biggest concern, of course, is going to be affordability. As we know, there are mechanisms, tools, options that can address affordability head on. I discussed last week the option of the buy down, permanent buy down, temporary buy down. Those programs are creating mass attention right now and really can be the intermittent solve for the greater issue at hand. And additionally, change is constant. Yes, right now is not ideal, but the reality behind it is it will not be this way forever. And there is a growing consensus, whether it's soon or later, that this will change. Rates will come down. We know that they cannot rise forever. Question becomes, how high will they go and when will they pull back? Only time will tell that. But there will be another side to this. And again, opportunity in this market, the individuals that take action today will undoubtedly be the successors down the road. As always, we're here to support you. If you need help in conveying this message, utilizing the tools to convey affordability, we would love the opportunity to support. Make it a great day and a great weekend. Thank you.